A real pleasure to be here with all of you and to moderate this power-packed panel. I truly feel after a decade and a half of being in this country that I always felt I was in the right place at the right time, but now the rest of the world also agrees with me. India truly has the conditions in place for an economic boom. There's multiple factors that are fueling this. There's offshoring, there's strong investment in manufacturing. There's, of course, the energy transition, and what we're all here today to talk about, which is the startup ecosystem powered by the country's advanced digital infrastructure. So really excited that we are sitting on the cusp of what could be truly India's decade and multiple decades to come. These drivers, we believe, could make India's $7.5 trillion economy in this coming decade. It could move our stock market cap north of $10 trillion. It could also mean that over these 80,000 startups that we have today could drive very significant value creation and also compounding in number in this coming decade. Which really brings me to the topic we're all here to discuss today, which is identifying high growth opportunities in what is a volatile time. And the first round of questions, I really want each of you to address your views on the current macro, because everyone has a slightly different perspective based on where in the state spectrum they sit and the kind of companies they're investing in. So maybe Samir, let me start with you. You have a very big job. You are the CIO of one of India's largest VC and private equity platforms. You're investing all the way from Series B through pre-IPO, which is a very vast spectrum. And you have this unique vantage point into India's private market over multiple decades now. And of course, we hear, the term funding winter being bandied around a lot. Would love to know, your perspectives. This is a very nuanced debate and discussion, and you've been a participant in this ecosystem for a very long time. It would be lovely to start with your thoughts.
Thank you, Lavanya. I think that's a very interesting question. And I think you already talked about the really bullish long-term outlook for India venture capital and private equity. So let me sort of put the current so-called funding winter into context with some historical facts. I think, as you said, right, India venture capital has come such a long way over the past decade. I think from our vantage point, 2021 was really an aberration. And I think if you accept that fact, then I think the slowdown relative to 21, which was the peak all-time highs in both investment volumes as well as exit volumes, I think is in the proper perspective. If you look at 22, for example, it was still the third highest level ever, both from investments and exits. That's really important to grasp. That some of the levels of 21 may not be breached for some time, but that's not a bad thing. I think number one. I think number two, I think is sentiment, right? We talked about the numbers. I think if 21 was sort of overly bullish, 23 is overly bearish, but it's not universal, right? I think if you actually just dig a little deeper, the real pullback has been from international capital. And, I'm here with Vikram and Manish, and we'll talk about the importance of domestic capital a little bit later. But I don't see a huge slowdown as I look around, our different peers from India. At 361, for example, our pace of capital deployment in 23 is roughly the same as it was in 22. In fact, I think we are now, at least in the tech world, almost have most of the correction behind us. We've seen a full-fledged reset in terms of valuations, in terms of this whole transition to profitable growth, capital efficiency, sustainable unit economics. And I think, what we are approaching now is a pretty attractive investment vintage. So I think, yes, if you look at the surface, you could call it a funding winter, but I think if you really sort of drill down deeper, I think it is thawing in some sense. And I think we will see another cycle emerging pretty soon.
That's wonderful to hear, and also fully agree with you on tourist money that comes and goes. But there's domestic capital that hopefully will continue to endure through all of these cycles. And really excited that we have three power-packed investors here who are all here for the long term and building for multi-decade. Vikram, let me come to you. You are the founder and managing partner of IVCap Ventures. In early 2011, when you started, this ecosystem was very nascent. You perceived that there was a role for a domestic manager that could hold the hand of startups all the way through this growth stage. There was a lot of more traditional Series A type venture activity, but you perceived this gap very early on. You're also an alumnus of the IITs, which has, of course, been responsible for a lot of the wonderful entrepreneurial energy in this country. Would love to hear your perspective. You've also seen multiple cycles through your career. What are you seeing?
As Samir said, I think, of course, there's been very interesting last few years that we witnessed. And I think we also believe that this is a great time to be investing. And the other important point also that he highlighted is also about the need for domestic capital. And this is one thing that I have done all my investing and venture capital, private equity career. All I have raised is domestic capital so far. If you put together all the funds that I've raised, I'm talking about having raised close to 5,000 crores of domestic capital. At IVCap, we manage about 4,500 crores. The biggest misconception in the minds of various investors that there's very little, or now, of course, that perception has changed. I think earlier there was this misconception that Indian institutions will not be investing in this asset class. I raised my first fund in 2008 after the crash, the global meltdown that had happened at that time, raised about 400 crores, all from the Indian institutions at that time. And that was my first experience of raising domestic capital or setting up any PE fund at that time. Coming with that background, all our funds, we have the who's who of Indian institutions as our investors. We've seen that attitude also evolving in the minds of the institutions, where they actually now have started liking this asset class. Having seen returns, we've actually returned almost 2.6 times the principal of the investors invested in our first fund, which has given them a lot of confidence. Even a second fund, we've already returned 40% of principal within 2 years. This is what the domestic institutions and LPs like, and even globally, that's what investors like. I think the challenge has been exactly this, how do you ensure that you're investing in a cycle when the chips are low, when people are running away from investing? I think that's an ideal time to be making investments. And the time of 2021 is an ideal time for exits. We actually made 4 exits at that time. In fact, we made some of the best exits you can think of at that time, when people were actually investing at very high valuations. So I think it's also about the timing of how you actually time your investments and exits. But at the same time, of course, luck plays a huge role. And I think a lot is happening in the global economy. And very interesting times have happened. And of course, we can't anticipate what's going to happen in the future, but we are quite bullish about the next few years. We're sitting on 2,000 crores of domestic capital right now, which we're deploying very actively.
I think that's an enviable position to be in, because often when the opportunity is rich, the money may not be there to invest. So to have both, I think is a very strong position from which to view the market opportunity that's unfolding. Very impressive. Manish, very excited to come to you. Looking at your background, you were a technologist turned entrepreneur turned VC. So you've literally been on every side of this table and worn all possible hats. And of course, you're looking at deep tech at global scale. And, that's the vision with which you are now, participating in this market. Would love to hear your perspective. What are you seeing now? Has anything changed materially in deep tech world in the last couple of years?
So yeah, we run a specialized thesis. So somewhat we are slightly dealing from the market dynamics a bit.
Yeah.
And we come in early. We come at seed level, pre-series A level. I think there the activity has not slowed down at all. Right? When the market was high, the activity was similar only what it is today. So it's a little delinked. So it doesn't make a difference to us. I think one thing that has changed is the market dynamics. Although let's say you are in deep tech, but there is some sort of an induction effect, and the founders' expectations on valuations get affected by those dynamics. So what we are seeing is a bit of correction on that, right? What are your expectations? And I think that's a good correction. I think 2021 was a hype cycle, and that was not to sustain, of course, right? So I think that correction we very welcome. And good time to invest. Actually, we are investing. We're investing out of our fund too. And one slowdown that we have seen is the Series B and the Series C's, right? So when our companies sort of scale, turn into businesses, there is capital, those rounds are taking longer than before. So that could be one effect of the market dynamics. But at the time we invest, we are not seeing, in fact, it is better for us right now for investments.
That's wonderful. And that's sort of what I suspected, because the earlier you go, the more delinked you really are from, the interest rate cycle and how quickly prices correct. And so very heartening to hear that early stage, continues to be robust across subsegments of tech. The next sort of topic that I want to double click on a bit more is something Vikram actually alluded to in his opening remarks, which is capital formation. We have really two main raw materials for our fund management business. There's money and there's talent. And domestic capital formation has been a very important topic, especially as a lot of institutions have come into a lot of compounding wealth. And Vikram, you mentioned you raised all domestic money in your funds, and you were sort of a very early spotter of this large opportunity to get exposure for some of these bigger institutions to this asset class. Would love if you could tell us about the journey through funds, right? Because sometimes, you have to show performance to then be worthy of getting a larger allocation. And sometimes there are larger global allocators who say, maybe if you're able to fill a big portion of your fund with domestic money, that gives me more confidence, especially if you're a first-time fund manager, to see if I can come in and sort of round this out. So would love to understand, what your experience has been with some of these large allocators. And as you look to bigger and bigger funds, do you want to continue to be all domestic? Are there other pools you're excited about that are chasing you? Would be lovely to talk a little bit about the journey of the capital formation bit.
Sure. I still remember 2008 and even 2011, 12, startup was a bad word, especially with these institutions. If you go and tell them that you're raising a fund for startups, they will just chase you away. So I think, that those times, people didn't even know what venture capital is all about, especially on the institution side. So it was not easy, in fact, thanks to my previous mentor, the former State Bank of India chairman, who actually guided me through the fundraise of Fund 1. He joined the Piramal group at that time after his retirement, which actually gave me the guidance that there is capital with such institutions. And I think initial period was all about, just about trust and their allocation to, or just a small allocation that they created. RBI guidelines were also even harsher than even today. Even IRDA guidelines were not very clear for the insurance companies. SEBI policies were not well evolved. AIF regulations came only in 2012-13. We were all called VCF funds at that time. There were no AIFs, whether you're real estate or infrastructure or whatever kind of fund you are. So it was not easy to raise funds, but I think it lot depended on the credibility, the brand name that you bring, and of course your ability to really obviously also convince them that you can create returns for this money. The other challenge you were going against was, nobody had ever returned money.
Yeah.
There was very few people who would actually, I think probably ICICI Ventures at that time was one, and maybe one or two people who would return money.
Yeah.
But there was no precedence of what's actually expected from this asset class. But of course, the good thing is that people liked our story right from the beginning. Our model was all about people focus.
Yeah.
And the fact that there was a huge support from the IIT Alumni Trust and the entire IIT ecosystem right from day one. That actually played very well with the entire institutional investors. And of course, returning the money to them, actual returns in cash, gave them much bigger confidence, which is, I think, true with any LP, but I think with the Indian LPs, it made even more sense, and it became even more critical because the perception was completely different. I think it has been a good journey now that there is a lot of confidence that they have. And some of these institutions like State Bank of India, LIC, they've invested in 4 of my funds, and I have 27 institutions today in our funds. And most of the institutions have invested fund after fund. So, and they've liked it, the fact that, you stay focused on a proper exit strategy and returning the money from time to time.
Wonderful. Manish, what has your experience been? Did you have a mix of domestic and international capital? What route did you start with, and where do you find yourself in your current fund?
Right. I think first, yes, we do have a mix, approximately half and half of domestic and in international capital. I think first time I was raising money was in 2016. Mm-hmm. And we have been a thesis-led fund. So we were actually an AI-focused fund at that time, deep tech AI-focused, and our deep tech thesis keeps changing, evolves with time. But at that time, nobody was doing AI. I mean, it was an early stage for AI in India, especially in 2016, right? So I think, so our fundraising journey was very difficult. It was not easy at all.
Yeah.
Thousands of meetings, hundreds and thousands, at least 1,000 meetings, I think, to raise 30 million that we did.
Wow.
But we were able to raise because of our thesis. We did not have prior investing experience, formal investing experience. But the thesis was strong, and the insights on the thesis was strong, and that's what appealed to a lot of people. Now, when we are doing Fund 2, after almost 4 or 5 years that we started, I think 5 years, we started around a couple of years back. We are just closing our fund, approximately 700 crores. And this time, one significant difference, right? Of course, thesis evolved, and again, thesis had fundraising, which was appreciated by most people. But one significant difference I found this time around was the domestic capital conversion, right? The number of meetings we had versus what we raised. In domestic capital was much better than the international one, or rather, I should not say than the international one, rather than the domestic ratio that we faced in sort of Fund 1, right? So Fund 1 to Fund 2 in those 5 years, I think, as Vikram also alluded to, I think the domestic capital is unlocking. Not just from institutions, a lot of family office, HNIs, technologists, entrepreneurs, etc., which is good to see actually, because India has a lot of potential, a lot of capital sitting, and if that can go to startups, that is always a welcome thing for us to grow and de-link from the US money or other money.
Absolutely. And there's also, I think, a lot of charm in delivering returns to our Indian institutions, right? And having them participate in this huge wave of growth. But, fully agree with both of you that the bar is very high on things like trust and accountability and, the fund manager having a very high say to do ratio, because they're also in many ways taking exposure for the first time. They have their own internal processes and committees, and it's always sort of a battle to say, let me push, this new shiny thing through. Samir, wanted to come to you. You have been part of fundraising machinery at, epic proportions. Would love some of the insights from the journey and sort of, at what point along the journey did this ability to gather large amounts of AUM and return, very, very high quality strategies, fund after fund. When did this flywheel really start turning for you? And would love some insights from that journey.
Sure. No, I think I would echo a lot of what Vikram and Manish have talked about. So despite, I think, our scale, we're pretty young as a business. Started off in 2016. And I will actually just pick up on what Manish said. There's a sea change in the awareness and sophistication domestically between 2016 and 23. In less than 7 years, the kinds of conversations we were having with family offices, HNIs, maybe to a lesser extent institutions because of the work Vikram and others had done prior to that. Yeah. But I think if you look at family offices and HNIs, I think their understanding of venture capital and private equity today is second to none. I think they have understood it as an asset class, occupying an important place in their portfolio. They've understood the role that it plays in value creation, where there's so much value creation and unlocking happening in the private market. Yeah. And as Manish said, some of it is linked to the public market, some of it is completely delinked. So there is a real space for this asset class to sustain. Yes, there could be shifts within the asset class, depending on market conditions and what is happening. And I would say, like, this is in this environment when there's a lot of focus on the negative, this is a huge positive for India that domestic capital is actually building in strength. We don't have to look to the US, right? Look at China. China really took off in venture capital when there were homegrown funds raising RMB money with homegrown institutions and family offices. That was the real inflection point. Yes, the global capital was there, but it was no longer dominating or leading. Yeah. And, there's a stat from 2020, I hope changed, but in 2020 at least, 80% of the money coming into India, VC and PE, was from international sources. And I think as that changes, I think you'll see a lot more resilience because, Vikram and Manish and I, this is our home market, right? So we're not investing anywhere else. And we're not looking at global macros or geopolitics. This is where we are based, and this is where we'll continue to deploy. So I think that's really important. And then the last thing I'll say, which Vikram also touched on, is track record, right? I think this is a very discerning LP universe. And, in our own case, on top of the 21,000 crores that we're managing, we've returned more than 11,000 crores to our LPs, right? And I think that is really important because there was skepticism around liquidity. Yes. And I don't think this is an LP universe that's going to look at, MOICs and paper returns. They need the cash back. And I think as sort of India VC and PE comes of age and starts to deliver more liquidity back, I think the overall sort of investment thesis will get even stronger.
No, absolutely, Samir. I remember when I was at Goldman, in around the 2015 time period, we were accused of India being a black hole. Like all this money keeps going in, but when is it coming out? Right. Yeah. And I think exactly like Vikram said, there are times to invest and times to harvest. And of course, there is a consistent cadence of investment activity that has to be maintained. But there are these pockets where it's really favorable to actually take those chips off the table, return that money, build that credibility with the people who trusted us with the money, and continue to hopefully be worthy of re-upping for future funds. Would like to change gears a little bit to the sectors that you are finding most exciting right now. Manish, you mentioned that within deep tech, obviously there's waves, and your thesis continues to evolve. Would love to know what's exciting Pi Ventures most right now.
Yeah.
And what we should be staying tuned for from your fund.
Okay. What I'm going to say might be surprising or may not make sense. But actually, when we were doing 2016 AI thesis, nobody was doing that. And then AI, we did a lot of investments in AI.
Yeah.
Today, everybody's talking about AI, but we are not doing that much AI. We have moved on to other things. And that's the evolution of thesis. So what are we doing right now? Of course, we do AI, but with the AI getting democratized, finding defensible IP in AI is becoming lesser and lesser. So but the other thing that has really picked up, especially in India, is actually the whole world of material science. If you think about physical innovations, like space tech is a slightly different arm, but if you just think about core material science, right, there are some fantastic work happening and big opportunity.
Wow.
Like we invested in a company out of Surat, actually, which is trying to do milk without starting from cow. It's called Zero Cow Factory, right? So things like that. Then we keep meeting material science company every week on week. They are doing different things, addressing, sustainability, addressing food shortage, addressing agri. Agri has a lot of scope for material science because most of the fertilizers and biostimulants that people are using in the market today are all like what I call as a tukka thing, right? They just kind of do some stuff and something works, something doesn't work. There's a lot of scope of science to go into it, of figuring out new materials which can change how crop yield works, etc. So I think for us, AI continues to be strong. However, the new areas from a technology perspective that we are looking at is material science in a big way. We are actually also looking at what we call as a third pillar in our thesis, which is AI is one digital pillar, material science is a physical pillar, but there is a lot of other digital technologies which is not AI. Talk about cyber security, talk about blockchain infrastructure, etc. So that's the third pillar of digital innovation that we are looking at. So that is how the thesis is evolving, and it will continue to evolve as technologies, change. For example, we are watching quantum. Maybe in a couple of years, quantum technology will become investable. Right now, I don't think it is, at least for us. So we evolve with times and technologies, and accordingly, our thesis and investments keep changing.
Fascinating. And I love that you were doing AI in 2016, where it seemed very sci-fi, but actually that was the time to invest, right? Not now when everyone's running after it and valuations are absurd and no one, is clear about the potential of some of those companies. So wonderful that you were so ahead of the curve, and wish you every success with material science and other digital innovation. Maybe Samir, will come to you. Obviously, there's a vast range for you to choose from.
Yeah.
So what is most exciting at the moment?
Yeah, and let me start with tech, right, where Manish sort of left off. And I think we are seeing, believe it or not, in growth and even pre-IPO, some real, I wouldn't say necessarily deep tech, but IP-led, innovation-led plays, right? So if you just look at what's happened in defense, right, and it's all tech-led defense plays in growth and pre-IPO, it's phenomenal, right? This didn't even exist a few years ago. So I think that's exciting. I think equally on the pre-IPO side, the entire supply chain decoupling from China, has really thrown up some very interesting plays where India can not only compete, but also win. And I think on the tech side, it's a little bit boring, but we've moved from high cash burning consumer to, more profitable, steady growth, B2B and enterprise tech. So I think there's plenty of stuff to do there. And the one other thing I'll call out would be healthcare. I think we see some of the very similar macro drivers, some of the same tailwinds that we saw with tech, both from the private sector and the government, both digital and traditional healthcare. And you'll see us making an announcement on the healthcare side pretty soon, because we're pretty bullish about the outlook there.
Lovely. No, I think as public goods move into the realm of private enterprise, there's huge investment opportunity. And healthcare is one such really underserved area. So very excited to see what you announce. Vikram, maybe we'll come to you. What segments within the technology ecosystem or the startup ecosystem are you most excited about at the moment?
In our case, we are primarily a Series A investor, right? And we are very driven by exits. And we are, at the time of investment, we're looking for whether this company is going to give us a 5-year value that we need. And what we're seeing is that if you look at sectors as a whole, you will see that there is some kind of a trend. You will see consumer, for example, was ready for Series A in 2016-17. Fintech Series A, happened. Most of the Series A happened in fintech in last 3-4 years. Yeah. There's still segments in fintech which are ready for Series A. So we look for those sectors which are ready for Series A primarily. And technology, the way we look at technology is basically, are these technologies really solving a fundamental problem? AI, of course, people like Manish are pioneers in the actual technology, but we've seen entrepreneurs just using the term AI just freely these days. So I really like this meme that I recently saw, that Air India raised substantial capital after they started calling themselves AI. So I think it's a matter of how the founders have learned the art of positioning themselves properly and just using the buzzword. So I think it's the game of really understanding what value is getting added at the core. And that's why we like Series A, even though we invest between seed to Series B, and we take bets on based on, entrepreneurs and the space and other things that all of us do. But the reason we like Series A is because that's the time when you can take meaningful stakes in companies. You can have a way forward towards an exit path, a 5 to 6 year exit horizon. You have meaningful control sitting in the boards of these companies and negotiate all the potential exit clauses at that stage. So that's our investment strategy.
Really like the discipline of, even on the way in, making sure there is some visibility to a path on the way out, right? I think that's phenomenal. Also shows in, the DPI you've delivered over the time IVCAP has been in existence. In the last 5 minutes, would love to have one parting thought from each of you for everybody who's listening, be that fund manager, entrepreneur. Maybe Samir, will start with you, go around, and then, I'll just quickly wrap up and hand it back to Aishwarya.
Sure. So I think I'd like to end on a very optimistic note. I think, the venture capital and private equity space is somehow looked at through the lens of 21 and everything is slightly negative. I think things are actually very good. There may be some sort of short-term friction in this transition. But if I look at it from the vantage point of an Indian fund manager, especially at least from our perspective, I think there's a very compelling opportunity in the near to medium term for us to step up. Manish talked about gaps downstream from him, Series B and C growth, even late stage. I think Indian fund managers can credibly claim market leadership, especially as some of the international capital is on the sidelines. So very bullish, not just about tech, but also about the other sectors that we do, healthcare, consumer, and financial services. And then, Lavanya, if I just zoom out and look at India as a whole, right? A few years ago, the entire trend was for Indian companies, maybe more on the enterprise side, but some consumer as well, to re-domicile overseas. And now there's a whole bunch of companies actively evaluating re-domiciling back to India. Yeah. You look at the health of our downstream pools of capital and the IPO market, and you see what is happening and will happen. Yes, obviously the sentiment has changed towards profitability, but companies are actually seeing, real viable paths to exit in India. So I think that's a very positive sign. And yeah, I think just very, very bullish about the next few years.
Lovely. Manish?
Overall, I think India is the place to be in the world. I think that's not there is no discussion on that. But I have to say that our policy making really sucks at multiple levels. And unless we change it, I actually don't see how I can do Fund 3 in India. Right? We are facing that issue a lot. Right? These are simple things, but over the last 7 years that I've been a fund manager, I have seen that my job day to day has become tougher from a policy perspective than becomes easier. And of course, there is a bit of a trend of coming back to India, but we are actually seeing the reverse. We are seeing a lot more companies unnecessarily going and registering outside because it's easier for them to run those companies. So just like 20 years back, or whatever that was, we were facing the brain drain issue, right? That yeah. We're actually facing an IP drain issue, and we will soon face a capital drain issue as well. The domestic capital that is in here, if it is not respected, it will go out. Most of the family offices, as you would also know, that they're trying to figure out a way to move their capital abroad. So we do have an issue. Apart from the entire rosy story that we look at, policy making really, really sucks at multiple levels, and that needs to get fixed ASAP.
No, very important point. Vikram, would love to have you chime in.
No, I tend to agree with whatever Manish has said. I think there is one level where there is a lot of intent. I think we see a lot of intent in the government to make things happen, to make changes, to move the system faster. But the other level is the actual execution. And at the execution level, things get lost somewhere. Very simple example, pension funds, we've been talking about it for a long time to free up some capital for this asset class.
Yes. And
every time we hear that, yes, this is a great idea, we should do it, there was some push from the top, and at the bottom, it completely got lost, so nothing moves, because there's small things, somebody has to just take it as a challenge and mandate and say that we have to make it happen. And unfortunately, nobody has that incentive or motivation to really do that at this stage, at least for this particular asset class. I think that probably needs to happen. But on the positive side, I think I have seen things moving despite the policy issues. So nobody can stop the way India is growing. Nobody can stop the way these changes are happening. The technology is driving the changes in the entire, whatever way, our way of doing things is changing so dramatically and drastically that, many of the businesses which are multi-billion-dollar businesses today will get disrupted in the next 4 or 5 years. And if you don't get disrupted, if you don't disrupt yourself, somebody else will come and disrupt you. And therefore, I see that as an opportunity sitting here as a venture capitalist, where we get to see a lot about what's happening in the market, and therefore we tend to spot at least what's going on. That's why I tend to form only a 5-year view when I'm investing in companies and look at what can change over the next 5 years. One can't predict even 1 year actually, okay. But you will have to make reasonable calls at that time. So I'm quite bullish about India. I've lived in the US, worked in technology with IBM, worked in the healthcare sector there. I've seen the developments. Robotics was being used in 2003 over there, and some of the latest things on AI have been used since 2000, early days of 2000 in the US. But I think India is now coming to a point where there will be a point of inflection very soon, given that some of these technologies we're talking about will substantially start disrupting our ways of doing things.
No, absolutely. I think the productivity gains, the driving of access, all of these will continue to compound over time. Really grateful for all the wonderful perspectives that were shared by all three of you. I think what I take away is there's a lot looking ahead that we have to be grateful for in terms of abundance of opportunity, but it's up to us as ecosystem participants and as policymakers to make sure that the enabling conditions exist to get the capital in, deployed responsibly, to make good on this wonderful, 10 trillion opportunity that lies ahead of us. So really grateful to each of you for your time. Thank you. And Aishwarya, over to you.
Thank you very much, ma'am. And with that, I thank the esteemed panelists, Mr. Sameer Nath, Mr. Manish Singhal, and Mr. Vikram Gupta for their enriching insights, and our moderator, Ms. Lavanya Ashok, for bringing the best out of this panel. Thank you so much, ma'am, for keeping it so interesting and engaging.